Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Shail D'Souza as well. Shail, a very good afternoon to you. Nifty, yes, at least managing to hold on to those 20,000 levels is enough today.
Absolutely, it's a FNO expiry, and remember that tomorrow we'll start a brand new season, so that's the reason why, or a brand new series, and that's one of the reasons why you're seeing the way how the markets are moving at this point in time. Nevertheless, you have Nifty holding above that 20,000 mark, or it started above the 20,100 mark as well, which it had surpassed in yesterday's trading session. Talking about Nifty Bank, that's the one that is actually seeing a sharper downtick when you compare it to the benchmark indices, but definitely all eyes will be on the IPO market and the stocks that I've listed today. And before I kickstart with talking about those, let me bring on board our team of research as well as the technical analyst who's joining us on the show today. We have Ankita who's joining us from the research side, as well as we have Ashish Kyal who's joining us on the technical front. A very good afternoon to you, and also good afternoon to you, Vinny. Let me kickstart with the first talk. Like mentioned, the action that is happening on the Dalal Street with regards to the new entrant, that's Tata Tech, Gandhar Oil, as well as Fed Bank Financial. If you look at the debut that Tata Tech or even Gandhar Oil has made, I don't think I need to speak anything about that, because it's been spectacular up move coming in from both of these counters, still holding on to very, very strong gains. What is heartening just to note is the fact that Fed Bank Financial, which actually started the day on the negative footing, has actually recovered from those levels, and now it is trading higher by approximately 4% or so, despite a relatively subdued debut that this particular counter posted. But yes, all eyes on Tata Tech, Gandhar Oil, and let's not forget Irida as well, which listed yesterday.
Surely an interesting lineup coming in terms of the IPO market. But let's move on and talk about the first stock on technicals. And Ashish, you've picked out Bandhan Bank for us today, surely trading with a good uptrend there. But in the last 6 months, we've seen a bit of a correction and consolidation coming in here. So, this up move that we're seeing today, do you think that is here to stay and continue?
Yes, if you look at Bandhan Bank, we can see that the stock has, after a long time, managed to break about that 224, 225 mark, which was the earlier hurdle. It formed a double bottom, showed positive divergence, and is picking up on the upside with volumes. So the overall tone for Bandhan Bank is positive from here on, and we can see Bank Nifty was outperforming until yesterday, and Bandhan Bank might just try to catch up on the upside. So long positions can be created here for the targets of around 240, and on the downside one can maintain a stop loss of around 218 levels.
Keep an eye out on those levels for Bandhan Bank. 240s one could watch out for there. But let's move on to the next stock, and RR Kabel is the stock that is in focus. We're seeing a fall coming in the stock. Last night, actually, the management came out with a notification saying that, Income Tax Department is conducting a search at some of their offices and manufacturing units of the company. But they're saying that business operations of the company are continuing as of now as usual, and they have not been impacted due to the search. But we've seen a sharp fall coming in the stock price in the morning trade, recovered from the day's lowest point as of now, but yes, still trading on the negative side as of now, downtick of 1%. Do not forget the stock has been falling in the last 5 trading sessions, so 6 consecutive day of fall that we are seeing coming in for the stock as well. And yes, keeping an eye out on more updates that will be coming in on this front.
All right, moving on, let's talk about KPR Mill then. Ashish, how does this one look in the charts?
See, KPR Mill is in an uptrend for quite some time, and we can clearly see that the stock has showed a very strong move from 600 rupees just few months back, and now it is trading on the upside towards the level of around 850. It has shown again a reversal after forming a flag kind of a pattern, giving a breakout on the positive side, and I think it is going to be headed towards the level of around 930 on the upside. That is the target, and on the downside one can maintain a stop loss of 830 level.
Okay, let's move on to the next stock. And Ankita, Ultratech Cement, this one too is in focus today. Why is that so?
That's correct. Ultratech Cement is in focus today. In fact, is up almost 2.5% in trade today, and it is coming on the back of the fact that the company has acquired a 0.54 MTPA cement grinding asset, of Burnpur Cement Limited, and this was for a consideration of 169 crores, and this investment marks the company's entry into the state of Jharkhand, and now the company's capacity in India actually stands at 133 MTPA, and on the back of this acquisition, the stock is soaring in trade up 2.4%.
Let's move on and talk about Tata Power today. Yes, we're seeing some pressure coming in on the stock today, but they did meet with some of the analysts. We have takeaways coming in from ICICI Security in terms of the management meet. What they're highlighting that the company said that they've set a target to double its revenue and profits by FY27. The momentum in terms of the build-up of renewables portfolio remains quite strong, and it has won 2 transmission projects as well. Besides that, the company also guided for a renewable capacity of 15 gigawatt plus by FY27, revenue for solar EPC at around 17,000 crore by FY27 as well, and the market share of 85% in electric vehicle, home charging and 55% in public charging segments is what one could watch out for. That was the highlights that came in terms of Tata Power and how they're showcasing in terms of the cost-effective pump storage of 13 gigawatt as well. So yes, keeping an eye out in terms of that, these are the key highlights that are coming in. Notable absence versus the previous analyst meet was in terms of the mention of the solar pumps, as the returns were subdued and more policy initiatives are something that is needed. So yes, on the back of that, we're keeping an eye on Tata Power, a bit subdued in trade today.
All right, that is Tata Power for you. But Poonawalla FinCorp, Ashish, what's happening in that particular counter? What are the charts indicating? Because we've only seen one-way move for this one, and that is upwards.
Yes, of course. If you look at past 2 days of session, including today, there has been a very stellar move on Poonawalla FinCorp that we can see, and it's not stopping anywhere else. So it looks like the stock has started the upward journey, and from here we can expect it to move towards the level of 440. But since the indicators are overbought, use dips around 398, 399 as a buying opportunity, maintaining a stop loss of 380, aiming for 440 on the upside.
All right, moving on, let's talk about Eicher Industry. This particular counter has been in focus over the last 2 trading sessions. If you look at the stock, it's fallen today as well, 4.8% downtick coming in for that particular counter. What the police has told agencies is the fact that the storage tank blast has killed 7 people and actually injured 24 at the plant of the company in Surat. And as I said, the stock has been on a downtrend for the last 2 trading sessions. Yesterday, it was down approximately 8.4%. Now, the fact that it is down in excess of 4.5%, this on the back that lives have been lost in the fire that the plant witnessed in Surat.
Okay, surely keeping an eye on that. Let's move on and talk about a stock that has been buzzing away in trade, and that is NBCC, Ashish. On the charts also, what an up move that we've already seen. What is the target that you're still keeping for NBCC now?
See, if you look at NBCC, it formed a low around 65 rupees and showed a very good move in just 3 days of time again. And it is managing to now break above the previous pivot high, which was around 73, 74 level. It's just around that level. So I think once it breaks above this, we can aim for the target of around 82 on the upside. And on the downside, one can maintain a stop loss of, which is the previous price action support area.
All right, moving on, Ankita, let's talk about not one but 2 stocks that seem to be in focus on back of one particular news flow, and that is Metro Brands and Nykaa.
That's correct. The news flow is that, for all the foot lovers, Foot Locker will enter Indian markets by 2024, and this is going to be in partnership with local players Metro Brands and the cosmetic to fashion retailer Nykaa. And the US-based athleisure chain, they will be spreading their footprint via this, partnership. And Metro Brands, which already has over some 700 odd stores across India, will exclusively own and operate the Foot Locker stores in the country. Whereas Nykaa Fashion is likely to operate Foot Locker's India website and also sell authorized merchandise, on a Foot Locker branded shop on its platform. And on the back of that, both Metro Brands and Nykaa are in focus, both up 3% and 2% respectively.
Surely keeping an eye out on both those names, but we're going to slip into a very short break, viewers. On that note, don't go anywhere. We'll be back with more stocks after the break. Welcome back, and you're watching Market Fatafat on ET. Now, let's keep it going with all the stocks that are buzzing in trade and in focus. And we have Praj Industries, that's the next stock that is in focus. They came up with a management presentation, and some of the highlights that are coming in from the presentation. 3 things. One, the company's role as a leading biotech company is expanding, and with a growing array of products in the domestic and the international market. The other point is the confidence in achieving sustainable growth over the next 5 to 6 years, and the ambitious target to triple revenues by FY30, implying a 20% CAGR growth for the company. These are some of the key highlights. Other than that, the company is working towards reducing its dependency on bioenergy segment as well. So they're targeting a revenue mix that would be bioenergy would account for around 62%. Currently, it's at around 74%, while non-bioenergy would be 38% going forward. The focus is on the growth trajectory is mainly going to be fueled by the international business as the highlight coming in for the global markets. Other than that, in terms of higher international business would lead to an EBITDA margin expansion, and EBITDA margins are expected to be healthy double digit as well. So that's the update that is coming in terms of the presentation. As of now, the stock is holding on to gains of more than 2%.
All right, moving on. Ashish, let's talk about Macrotech developers and how is this one looking on the charts to you, because we know that all the realty stocks have been on fire of late.
Indeed, if you look at the realty stocks, they have been buzzing around for nearly a year now, and I think Macrotech has not stopped. It has just shown 2 days of consolidation and now getting ready to again resume the up move. One can create long positions in Macrotech. It is bouncing back from its 20-day average also for the target of around 960 on the upside, and on the downside, one can maintain a stop loss of around 830 levels.
Moving on, let's talk about Arvind Fashion, and that particular counter is in focus because Antique Stock Broking has started the coverage of the counter with a buy rating. They've set a target price of 565 rupees per share. Well, Antique is saying that Arvind Fashion, which retails brands like Arrow and CK, has very strong portfolio of brands in the fast growing casual wear category. They're saying that the focus over the next 2 to 3 years on scaling up existing brands and not new additions. Arvind Fashion is well placed to revive Arrow, CK, Tommy Hilfiger, as well as Flying Machine brands. They're also saying that the optimism on the back of strong casual apparel markets, CK's potential to turn into a power brand, and corrective actions for improving the supply chain as well as for working capital. All of this will actually aid Arvind Fashions. That's why they have a buy rating on this particular counter, set a target in excess of 565 rupees per share, or rather 565 rupees per share. That's why Arvind Fashion is in focus.
Let's move on and talk about Eicher Motors, Ankita. There's a brokerage note that has come in. What are the details?
That's correct. Jefferies has come out with a brokerage note on Eicher Motors, and on the back of that, the stock is up 2%. Now, they're maintaining a buy on the counter with a target price of 4,650 rupees per share. Now, they feel that Royal Enfield's annual biking festival in Goa and the management interaction at the event has increased confidence for Royal Enfield's brand appeal and community connect. They also see very limited impact on Royal Enfield from the recent competitive launches. They see potential for re-rating as confidence on the long-term market share sustainability, and they also see tailwinds for the two-wheeler demand recovery and premiumization. And on the back of that, they're maintaining a buy on the counter, and we see Eicher Motors soaring in trade up 2%.
All right, Eicher Motors, that is surging in trade. But Ashish, what's exactly happening with these two-wheeler counters? Because all of them have been in focus of late. Do you think that the focus on these counters will continue to persist?
Yes, it looks like, because on the chart there is absolutely no slowdown in the momentum. We can clearly see after a few days of consolidation, the stock is ready to start its fifth wave on the upside. I think the overall tone for Eicher Motors is bullish. We can expect a target on the upside around 4,100 levels, and on the downside one can maintain a support of around 3,770 levels.
Keeping an eye out on those levels there, but let's move on, talk about Aurobindo Pharma. This one is in focus after they've received a US FDA approval received by UGR Pharma Specialties Limited, which is a wholly owned subsidiary of the company, for budesonide inhalation suspension of 0.5 mg and 2 ml single dose, which is a product that is expected to be launched in FY25. Now, the approved product has an estimated market size of around $226 million for 12-month period ending September 2023. This is according to the data of IQVIA. And on the back of this, we're seeing that Aurobindo Pharma today is holding on to some bit of a gain, 1.6% gain as of now.
All right, moving on. Ashish, let's talk about GIC Re, because yes, we've seen all of these insurance companies actually in focus of late. We also had an ET Now Newsbreak confirmed also, which led to most of these insurance companies see a sharp spike. But GIC Re, another story altogether on the charts?
Yes, if you look at the stock has started moving from 225, now it is at 318 in just 2 weeks of time, and it's not looking like stopping here at all. We can see the stock is overbought, but the momentum is still intact, and we can expect it to go towards the upside level of around 360. And on the downside, one maintain a stop loss for the stock at around 295 levels.
All right, moving on, let's talk about Dreamfolks then, and that particular counter is in focus in today's trading session. They've partnered with Russian airport and lounge service aggregator known as Grey Wall, and post that particular partnership that they have done, you can see the stock actually is trading higher by about 2.3% as we speak.
Okay, let's move on and talk about Bharat Forge then. And Ankita, Bharat Forge, why is this one in focus?
That's correct. Bharat Forge is in focus today, and it is coming on the back of a note that has come out of CLSA, and they're maintaining a sell on the counter with a target price of 987 rupees, and they feel that the growth momentum is likely to continue. It is led by defense and aerospace. They also feel that the new acquisitions will likely turn around, and the new verticals are likely to be the growth drivers for the company. And on the back of that, we did see Eicher Forge soar up 1%, but that has cooled off a bit, and it is up 0.4% as of now.
All right, moving on then, let's talk about Lupin. Ashish, how is the charts of this one looking to you?
If you look at the overall space of pharma, that has been outperforming, and Lupin has been started re-up move much earlier than many of the pharma stocks have. And given that the ratio analysis, if you do, it is showing that the ratio of Lupin with respect to the pharma is moving up. That shows an outperformance. So we are expecting a target on Lupin somewhere around 1350 levels on the upside, and the important support for the stock is at around 1190.
Okay, keeping an eye out on that one. Let's move on, talk about Zomato then. And Zomato is in focus because we have numbers that have actually come in for Swiggy. So stacking both these with each other, when you look at it in terms of food delivery, gross order value growth, that's better for Swiggy. It's come in at 17% for the first half of calendar year 23, while in terms of Zomato, it was 13%. Other than that, in terms of when you compare in revenue growth, Zomato saw a 58% growth in this first half period, while Swiggy saw a 9% growth as well. Market share, yes, Zomato surely is maintaining its market share around that 54%, but seems like marginally, a very marginal number is what they have lost in terms of market share to Swiggy. Swiggy's market share is at around 46% as of now. Other than that, delivery partners also, Swiggy has a higher bit of a delivery partner versus restaurant partners for Zomato, delivery partners for Zomato as well. Let's keep an eye out on that. Obviously, yesterday we had seen a big bulk deal that has happened as well, and a lot of funds have actually entered into Zomato as well. So keeping an eye out on Zomato on the back of these two news flows.
All right, that is Zomato in focus for all of you. But with that, we come to the end of this edition of Market Fatafat. Thank you so much, Ankita, as well as Ashish, for joining us on the show and taking our viewers through all the stocks that are in focus. And before we wind down, ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, which is a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day is being celebrated on the 5th of every month. So join ET Now Swadesh, as well as Sundaram Mutual to learn how you can build your financial future with an SIP in the mutual funds.
Okay, and with that, we're absolutely out of time on this edition of Market Fatafat on ET Now. It's a goodbye from Sharon, myself, as well as the team who put this show together.